in the fast-moving current of the financial world, well, cutting through the sheer volume of information to truly understand the companies shaping it can feel like a monumental task, can't it?
It really can.
Today, we're taking on that challenge. We're embarking on a deep dive into FactSet's fourth quarter and full fiscal 2025 earnings.
And our goal for this deep dive is precisely that, to distill the most critical insights from their recent earnings call, presentation, and press release. Both came out on September 18th, 2025.
Right.
We'll try to uncover what's genuinely driving their business, strategic plays and their forward-looking vision, particularly concerning the ever-evolving landscape of artificial intelligence.
Okay.
And just quickly, for anyone new to them, FactSet is a global financial digital platform and a major provider of enterprise solutions to the financial industry.
Exactly. So consider this your express route to becoming well-informed about a key player in financial intelligence. We're going to highlight surprising facts and critical takeaways, connecting the dots that, often get lost in those dense financial reports.
Without the usual information overload, hopefully.
That's the plan. Let's start by unpacking FactSet's fiscal 2025. When you look at their full-year results, what kind of consistent performance truly stands out, and why is that so significant in this market?
Well, what's really remarkable here isn't just like a single strong year, but their long-term track record. It's quite something.
Okay.
FactSet achieved over 45 consecutive years of revenue growth. Just think about that for a second. That kind of sustained performance.
Wow.
They also reported 29 consecutive years of adjusted diluted EPS growth and 26 years of consecutive dividend growth.
That's consistency.
These aren't just impressive statistics. They are robust indicators of deep financial health and resilience.
Yep.
It really demonstrates their ability to thrive across various market cycles.
45 consecutive years of revenue growth. I mean, at some point, their annual report must just say, still growing, see you next year. That's an incredible streak.
Yeah, pretty much.
But beyond that multi-decade consistency, they also hit their more immediate targets, didn't they? Their annual revenue came in at $2,322 million.
Yeah.
Squarely within their guidance range of $2,305 million to $2,325 million. Their adjusted operating margin was 36.3%, right in the sweet spot of their 36.0% to 37.0% guidance.
Mm-hmm.
And adjusted diluted EPS hit $16.98 within their expected $16.80 to $17.40 range. Now, a crucial clarification here, though. While the adjusted operating margin was 36.3%, their actual full-year organic ASV growth was a strong 5.7%. Is that right?
Yes, that distinction is incredibly important. And just to be clear for our listeners, ASV stands for annual subscription value.
Right, recurring revenue.
Exactly. It's essentially the total value of their annual recurring revenue from subscriptions. And it's a critical metric because it reflects the predictable, stable income that, underpins their business model. The significance of that 5.7% organic ASV growth is further amplified by a strategic shift. Beginning in fiscal 2025, FactSet now focuses purely on annual subscription value, rather than including professional services revenue in that metric anymore.
Oh, interesting. Why the change?
Well, this underscores a clear strategic move towards providing more managed recurring services and less project-based work. It reflects a fundamental evolution in their business model towards deeply embedded, consistent solutions.
So if we put all of that together, decades of consistent growth, hitting financial targets, and the strategic pivot to even more recurring revenue, what does this tell us about FactSet's stability and its competitive edge, especially in a sector as complex and demanding as financial intelligence?
Yeah, it paints a very clear picture. This isn't just about weathering economic storms. It's about building solutions so essential that they become, deeply embedded in client workflows.
Right, sticky.
Very sticky. This kind of long-term consistency signifies robust pricing power and exceptionally high customer stickiness. For financial institutions, the cost and disruption of switching providers can be immense, making FactSet services quite indispensable.
So it tells us they're not just providing data.
Exactly. They're providing the very infrastructure that many firms operate on, which is a powerful differentiator.
That makes perfect sense. Okay, moving beyond the pure financial figures then, what strategic moves did FactSet make in fiscal 2025 to really solidify its market position and drive innovation? Because in financial intelligence, like you said, it's not just about having data, it's about how you integrate and deliver it.
Absolutely. And they executed several key strategic plays on this front. On the partnership side, for instance, they were recognized as Databricks Financial Services Data Partner of the Year
Okay.
which really highlights their strong capabilities in data integration and analytics. They also integrated real-time bond pricing data from MarketAxess and BondCliQ directly into their platform.
Right, you mentioned that.
Yes, significantly enhancing fixed income workflows with more efficient analytics. And they expanded their aftermarket research coverage, adding major brokers like JP Morgan and Barclays to their already extensive list of over 1,800 global brokers.
Wow,
Yeah,
1800s.
all these partnerships are really about making their open platform even more comprehensive and powerful for users.
Those sound like big steps towards richer, more integrated data solutions. What about their M&A and divestiture activities? Were there any notable moves there to deepen client workflows or maybe enhance strategic focus?
Indeed, they were very active on that front as well. First, they acquired Irwin,
Irwin.
yeah, which is designed to provide investor relations professionals with a unified solution for investor engagement and research. Then there's the acquisition of Liquidity Book,
Okay.
adding crucial OMS, that's order management system, and EBR,
Hmm.
or investment book of record, capabilities. This is really about seamlessly integrating workflows across the entire portfolio lifecycle, from trade execution right through to record keeping. They also acquired Logo Intern, a solution aimed at automating some of those manual tasks for junior bankers.
Got it.
And on the other side of the ledger, they strategically divested RMS partners to Blue Matrix. Now, this was a smart move, I think.
How so?
It enhances the focus and efficiency of FactSet's Dealmakers product offering, while also establishing FactSet as a preferred data provider to Blue Matrix. So they maintain a beneficial relationship there.
So it really seems these actions are tightly aligned with FactSet's stated goal of deepening client workflows and enhancing focus. They're not just, buying companies randomly.
Not at all.
They're acquiring and integrating specific capabilities to provide tailored solutions and streamlined processes across diverse client types.
Okay, so how do these strategic alliances and these targeted acquisitions uniquely position a financial intelligence firm like FactSet? How do they help stay ahead in such a competitive market? And maybe more importantly, what specific value do these integrated solutions ultimately bring to the financial professionals who rely on them daily? Well, these moves are fundamentally about creating an ecosystem, right? By integrating more data sources and acquiring companies that fill specific workflow gaps, FactSet is making its platform more, well, indispensable.
And us reason to leave.
Exactly. For financial professionals, this means fewer disparate systems, less manual data reconciliation, and just a more holistic view of their portfolios and markets.
Yeah.
I mean, imagine having real-time bond pricing and comprehensive IR tools all within the same environment where you conduct your core analysis.
Yeah, that's powerful.
It significantly reduces friction, saves time, and crucially, reduces the potential for errors.
Yeah.
It allows them to focus on higher value activities.
Mhm.
It's really about providing a truly end-to-end efficient solution.
Okay, let's shift gears a bit. AI, it's clearly reshaping industries everywhere, and finance is certainly no exception. What were FactSet's specific investments and achievements in artificial intelligence during fiscal 2025? Did they translate that AI blueprint they talked about into tangible results?
They absolutely did. FactSet has been executing on its multi-year AI roadmap, and in fiscal 2025, they unveiled FactSet's Intelligent Platform.
Okay.
This builds on their AI blueprint by integrating conversational AI at a fundamental platform level, which should make interaction more intuitive.
So like talking to the platform.
Sort of, yeah. But more than that, they also launched 6 brand new AI products specifically designed to automate complex tasks and enable what they call agentic workflows.
Agentic workflows, what does that mean exactly?
Think of them as AI systems that can proactively initiate and complete multi-step tasks without constant human oversight. So moving beyond just simple conversational responses to actually performing actions based on the conversation or triggers.
That's a leap.
It really is. This signifies a tangible shift from concept to concrete product offerings, showing a clear, deep commitment to leveraging AI.
That's a significant step into the practical application of AI then. Now, beyond the impressive technology, a company's true strength often lies in its customer base, right? What do FactSet's client and user numbers, along with their retention rates, tell us about their market penetration and customer loyalty? Are people sticking around? Are new clients joining?
Yeah, the numbers here are undeniably strong and point to healthy growth. FactSet reported 237,324 users at fiscal year end,
Wow.
which is a 9.7% increase, or over 20,000 new users from the prior year. And this growth was primarily fueled by the wealth management sector.
Interesting.
Their overall client count also grew by 9.5% to 8,996. That's adding 779 new clients, largely in the corporate and wealth management segments again.
Okay. And retention. That's key.
Absolutely key. Crucially, they maintain strong ASE retention at greater than 95%.
95% plus.
And client retention at 91%. These figures indicate not just successful market penetration, but really high customer satisfaction and a very healthy stream of recurring revenue, which, as you know, is incredibly valuable for investors.
Definitely. So when we see these advanced AI capabilities being implemented, combined with consistent client and user growth and such high retention rates, what does this signify for a company's long-term health and growth potential, especially in such a rapidly evolving market?
Well, it speaks volumes about the stickiness and perceived value of their platform. The AI capabilities make their product even more attractive and efficient, right?
Yeah.
Empowering financial professionals to work smarter and faster.
Right.
When you combine that with high retention, it suggests that clients view FactSet as an essential partner, not just, some vendor they can easily swap out.
Creates a virtuous cycle.
Exactly. It creates a powerful flywheel effect.
Uh-huh.
New AI features attract new users who then find the platform indispensable, leading to sustained retention and growth. It's a very positive indicator for durable long-term success.
All right, let's zoom in then on the most recent quarter, Q4 2025, just to see the immediate performance trends. What were the standout financial results from this period?
Okay, for Q4 2025, FactSet reported GAAP revenues of $596.9 million. That's a 6.2% increase from Q4 2024.
Solid growth.
Yep. Their organic revenues also showed strong growth, increasing 4.5% to $587.3 million. Looking at profitability, GAAP diluted EPS saw a significant jump, 73.7% to $4.03.
73%.
Wow. Yeah, while adjusted diluted EPS increased a solid 8.3% to $4.75. And free cash flow also showed robust growth, up 29.8% to $178.1 million.
Okay, strong quarter across the board then. However, I noticed while GAAP operating margin saw that substantial increase, 700 basis points, you said, to 29.7%, the adjusted operating margin actually decreased 200 basis points to 33.8%. What's behind these different movements, and why is it important for us to look at both figures?
Yeah, that's a great point, and it's a perfect illustration of why both GAAP and adjusted figures matter so much. So just to clarify again, 700 basis points is 7 percentage points, and 200 is 2 percentage points.
Sure.
The GAAP operating margin increase was primarily due to revenue growth, yes, but also the positive impact of lapping prior year charges. Basically, they had a one-off negative hit last year related to a Massachusetts sales tax dispute that didn't happen again this year.
Ah, so it makes the comparison look extra good.
Exactly. Makes this year's GAAP comparison look particularly strong. The adjusted operating margin decrease, however, gives us, I think, a clear operational picture. This dip was mainly due to lapping a lower bonus accrual in the prior year, meaning bonuses were higher this year comparatively, and also higher technology expenses in the current year.
Okay.
So while the GAAP numbers look dramatically better because of that prior year anomaly, the adjusted figures give us a more accurate sense of the ongoing operational performance, factoring out those one-time or non-recurring items.
That really helps clarify the difference. Thanks. Now, beyond investing in growth and operational efficiency, how does FactSet balance that with returning value directly to its shareholders? What did they do in fiscal 2025?
Well, they've shown a really consistent and robust commitment to shareholder returns. In fiscal 2025, FactSet returned a significant $460.4 million to stockholders.
$460 million.
Yeah, through a combination of share repurchases and dividends. They increased their quarterly cash dividend by 6% to $1.10 per share back in May 2025.
Okay.
Which marked their 26th consecutive year of dividend increases, another one of those impressive streaks.
26 years of dividend hikes.
Yep. And additionally, they repurchased 259,721 shares for $106.6 million in Q4 2025 alone. And they still have $400 million remaining under a new share repurchase authorization, which signals, continued intent.
And this commitment to shareholders, it isn't just about the immediate returns, is it? It's a powerful signal. How does a company's approach to capital allocation and shareholder returns, especially those consistent dividend increases, truly reflect its confidence in its future performance and overall financial health?
Oh, it reflects profound confidence. I mean, a company that consistently increases its dividend for over 2.5 decades and actively engages in share repurchases like this is essentially telling the market a few things.
Like what?
That it has strong free cash flow, that it believes in the sustainability of its earnings, and maybe that it thinks its stock is undervalued. Yeah. It suggests management sees a clear path for continued growth and profitability.
Right.
And crucially, it's willing to share that success directly with its investors Rather than, say, hoarding cash or making overly risky bets, it's really a hallmark of a mature, financially disciplined, and confident company.
Okay. So, with all this success and strategic momentum behind them, what does FactSet actually envision for the immediate future? What are their expectations and their guidance for fiscal 2026?
Right. Looking ahead, FactSet has provided clear guidance for fiscal 2026, which
Right.
is crucial for investors and observers. They project organic ASV growth to be between $100 million and $150 million,
Right.
which translates to approximately 4.2% to 6.2% growth on that new ASC basis we talked about. Total revenues are expected to range from $2,423 million to $2,448 million.
Hmm.
And adjusted diluted EPS is forecast to be between $16.99 and $17.60.
Okay, so relatively stable EPS outlook compared to 25.
Seems that way, yeah. And it's probably worth noting the leadership shifts that occurred just around the fiscal year end. Sanket Viswanathan took over as CEO on September 8, 2025.
Right, new CEO.
And Malcolm Frank was elected board chair effective September 17, 2025. Both the new CEO Viswanathan and CFO Helen Shan have publicly emphasized balancing those strategic investments, like in AI, with disciplined execution to drive durable long-term stockholder value.
This outlook certainly seems to reinforce FactSet's mission to supercharge financial intelligence by continuing to innovate across workflows and maximize the value of their data and tech ecosystem. It's clear they're focused on building on their momentum.
Exactly. And for those following financial technology, understanding these forward-looking statements is crucial. If I were tracking FactSet closely, I'd be watching that organic ASV growth number.
The $100 to $150 million range.
Yeah, that 4.2% to 6.2% range. It'll be key to see if their strategic shift to subscription-only ASV reporting is paying off as expected. Also, monitoring the progress of their AI product adoption will be vital to gauge their innovation efforts.
Right.
These are probably the metrics that will help you gauge FactSet's progress and maybe the broader trends impacting the sector over the next year.
What an incredibly insightful deep dive into FactSet's fiscal 2025 performance and their vision for the future. We've really seen a company with an outstanding track record of growth, making shrewd strategic moves in partnerships and M&A, heavily investing in AI, demonstrating robust operational health, and consistently returning significant value to shareholders. Quite the picture.
It really highlights a company that, as their new CEO put it, is at a strategic inflection point. They seem to be leveraging their differentiated data, their open platform, and a deeply client-centric approach to maintain leadership in what's becoming an increasingly AI and data-driven financial landscape.
And that brings us, as always, to our provocative thought for you, the listener. In a world where AI and data are rapidly redefining financial markets, how will firms like FactSet continue to balance offering truly deep, comprehensive analytical tools with delivering user-friendly, intelligent platforms that genuinely supercharge financial intelligence for every type of client, from the biggest banks to smaller wealth managers?
Yeah, that's a key challenge.
And what unexpected shifts might this intensified focus on managed services and these integrated ecosystems bring to the broader financial sector? And maybe how might it influence how you, as a learner, approach and interpret critical financial information in the years to come?
Lots to think about there. Keep exploring, keep questioning, and keep making those connections that turn all this raw information into genuine insight.